What is alternative investing? What are the different types of alternative investments that we most commonly see? What's the difference between using a taxable account and a non-taxable account to invest in alternative investments? And then what are some considerations that investors will think through as they're engaging in alternative investments? We're going to answer these questions and a bit more in today's program. Hi, everybody. I'm John Bowens with Equity Trust Company. We're a directed IRA custodian. What that means is we allow individuals to use their retirement accounts to invest in the private markets, to invest in alternative investments. So they're not restricted in only investing in the public markets. They can invest in the alternative private investing markets. We don't give tax advice, legal advice, financial advice. We don't provide recommendations on where to invest. What we do is allow individuals to take full control of their retirement savings accounts and diversify across a much broader spectrum of investments. So that leads us to, what is alternative investing? Well, don't be overwhelmed by this term alternative. All it means is that it's alternative to the traditional public markets. See, most folks with their financial arrangements, their IRAs, their 401ks, their even taxable accounts, they hold these accounts with various financial institutions. And then in many cases, those financial institutions can only help those individuals invest in public market investments. So investments like individual stocks, publicly traded stocks, mutual funds, ETFs, exchange traded funds, maybe treasury securities or other fixed income securities, CDs, money market accounts. All right, we would consider all of those public market investments. But then over here, we have alternative investments, also known as private market investments. And see, with the right financial institution, you have the ability to self-direct your funds. And when we talk about retirement accounts, you'll often hear us use the term self-directed IRA or universal IRA. So this signifies that you have the ability to take control and invest beyond the public markets. So in conclusion, alternative investing just means alternative to the public markets. Now, why do folks consider investing in alternative assets? Well, first, let me pause and mention that alternative investing may not be right for everybody. But for some folks, they have a particular skill set or expertise, or they're gaining knowledge and guidance from another individual to invest in alternative investments. Again, here at Equity Trust, we don't provide guidance or recommendations on alternative investments, but we have the systems that allow you to take control of your retirement savings accounts and self-direct into various asset classes. And we're going to talk about those in just a moment. But generally speaking, folks seek out alternative investments because generally alternative investments are going to behave differently from a financial perspective compared to public market investments. They're going to respond to markets differently. You're going to hear this term correlation, meaning correlated to the traditional public markets. Generally speaking, alternative investments have little to no correlation to the public markets. So that can allow an investor to create a portfolio that's not fully invested in the public markets and therefore subject to the risks associated with the public markets. So think diversification across a broader spectrum of investments. So let's break it down into the 5 different alternative investments. So the first is real estate. The second would be private debt, also known as private lending or notes. The third would be private equity. That could be a private equity fund, a hedge fund, or it could be investing in equity in a privately held company. The fourth would be cryptocurrency. A lot of folks aren't aware of the fact that they can use their retirement account, if structured the right way, and invest in cryptocurrency. And then the fifth is physical gold and silver. Now, yes, you could use your retirement account. We call it a self-directed IRA. You could use a self-directed IRA and invest in a gold or silver, let's say ETF or mutual fund that has exposure to those assets. But some people want to have the physical gold or silver. Now, have that physical gold or silver stored at your own home, but you could have it stored at a depository. So your self-directed IRA could directly own physical gold, silver, and other precious metals that are permissible under Section 408M of the Internal Revenue Code. So let's go back to the top, real estate. You could own real estate in your self-directed IRA, and your growth would grow either tax deferred if you have a tax deferred account, or in the case of a Roth, all of your growth and your distribution, so as long as you're following all the rules and guidelines, would be tax free. So for example, we have clients here at Equity Trust that own single family rental properties. I'll give you a quick example. We have a client, her name is Jackie. She bought a property for around $91,000 and some change with her self-directed IRA. She's renting it out for about $950 a month. And so that $950 flows back into the self-directed IRA every month. She pays no taxes because it's in the tax-exempt structure of the self-directed IRA. Eventually, when she sells the property, there's no long-term capital gains tax, no recapture depreciation. She owns physical real estate in the self-directed IRA. Now, you will learn there are some rules and guidelines. There are disqualified persons and prohibited transactions that you have to understand. And so in some of our other videos, we talk about what those common pitfalls are and what the rules and guidelines are. Now, we started to touch on the difference between taxable and non-taxable. So when we say non-taxable, we're talking about our self-directed retirement accounts. So if you have an old 401k, 403b, thrift savings plan, IRAs, simple IRAs, SEP IRAs, you can transfer or roll those over into a self-directed IRA. No taxes or penalties, by the way. As long as you follow the rules and guidelines, you move the money over into the self-directed IRA, and then you can deploy that capital for these real estate transactions. And then all of your profits flow back in, either tax deferred if you have a tax deferred account, or if you have a tax-free Roth account, all of your profits flow back in tax-free. All right, so those are just a few examples of real estate. Let's move on to notes. I would also include in this category private money lending or private debt. So this is where your self-directed IRA or other retirement account is making a loan, either secured or unsecured. Now, your self-directed IRA making a loan secured by real estate, you would have a promissory note and you'd have a deed of trust or mortgage. So maybe you're lending money to an investor to flip a house, or maybe you're lending money to an investor for rehab of a house that they have already purchased. Right? Your self-directed IRA can serve as a private money lender. Now, you will learn in our rules and guidelines education that you can't lend to yourself, you can't lend to a business that you own. The idea is this needs to be for investment purposes only. You can't personally benefit in the here and now, but you can lend money to other investors. You could lend money secured by equipment. You could lend money secured by other types of collateral. You could lend money to a company, and in some cases you'll hear this referred to as a convertible note. So the idea here, the concept and conclusion, is that your self-directed retirement account can serve as a private money lender or can buy debt, buy a note. All right, let's move on to number 3, which is private equity. Now, private equity, that could be a private equity fund, which would be a fund, a privately held fund, and that fund is operated by an individual or individuals, and then they're using the money pooled across many investors to then go out and invest in various target companies. And there are a variety of private equity funds, and they have various strategies and tactics in terms of the target companies that they're looking to acquire, to add value, and then pay back investors their principal plus profit. So when you hear private equity fund, that's generally what we're talking about. But then there's private equity in the sense where your self-directed IRA is investing in a privately held company. So your IRA has equity in a privately held company. I'll give you some examples. I have a client who is a retired or is a retired surgeon, and he had a particular expertise and interest in investing in startup surgical companies. So these were sort of venture capital type opportunities, high risk but potentially high return. And so he was using his self-directed Roth IRA to invest in these startup businesses. And then if one would take off, his profit would flow back into his self-directed Roth IRA. So the idea is your self-directed IRA can invest in privately held companies. So you go out and find opportunities, meet investors, network. Maybe you have a good friend or business acquaintance that approaches you and they have a great idea. They're starting up a company and they're looking for capital. you could potentially use your self-directed IRA to invest in those privately held company opportunities. All right, so when we say private equity, that's what we're talking about. The next one is cryptocurrency. So this is a topic of conversation very routinely. You can use your self-directed IRA to invest in cryptocurrency through the Equity Trust fully integrated cryptocurrency trading platform. So we have built a fully digital connected system that allows an individual to set up an IRA, roll money into the account, or maybe make a contribution, and then place trades in the crypto markets. So you can buy individual coins, and then when you sell those coins, your capital gains is exempt from taxation in the self-directed IRA. You'd either have tax-deferred growth in the case of a traditional IRA, or in the case of a Roth IRA, you would have tax-free growth. So just as a hypothetical example, let's say you bought $15,000 in cryptocurrency with your self-directed Roth IRA, and then you sold that cryptocurrency, let's say a year later, for $30,000. So you made a $15,000 gain. That $15,000 would go back into the self-directed Roth IRA, and you'd pay 0% tax because you're in a tax-free Roth IRA environment. So you'll learn when you open up an Equity Trust self-directed IRA, you'll be able to access this cryptocurrency trading platform. We don't recommend or advise on what cryptocurrency to invest in or what allocation of your portfolio to put towards cryptocurrency, but you would do your due diligence and research, determine what makes the most sense for you, and then you could deploy your capital accordingly. All right, last but not least, number 5 is physical precious metals. Gold and silver. Now, there are other precious metals under Section 408M of the Internal Revenue Code that defines what types of metals, the fineness of those metals, coins versus bars, etc. But the idea here is you could use your self-directed IRA. You would want to find a metals dealer, all right, someone that you can buy the metals from, and you can use your self-directed IRA to buy physical metals. And then those physical metals are delivered to a depository of your choosing. No, you can't have those metals delivered to you personally and stored in your own lockbox or at your own home, because that would be a prohibited transaction. But you can buy physical metals with your self-directed IRA and then have those delivered to a depository. So those are the 5 asset classes. Now let's talk about some of the considerations. These are alternative investments. Okay, so with alternative investments can come illiquidity. All right, in other words, you may have a lockup period. So you may have to hold those investments for a period of time, right, before you can sell those investments. You'll also learn when we go back to private equity and investing in privately held companies, you'll learn that Equity Trust, we have a tool called WealthBridge. And WealthBridge can allow you to digitally connect into private market investing platforms. Now, we don't endorse or recommend those different platforms. What we do is we provide that digital connectivity so you can use your self-directed IRA in a very turnkey way. You can invest in privately held companies or invest in private equity. All right, and so with that, you have to understand that there can be a lockup period, meaning it's not like a publicly traded stock or mutual fund where you can simply sell that stock and now you have cash back in your account in a relatively short period of time. All right, that's known oftentimes as a lockup period. So your investments might not be as liquid as what you're familiar with now. Now, when you sacrifice liquidity, what you should be getting back in the form of that investment not being liquid is return or yield. So you're going to want to make sure you do your due diligence, and do you feel that you're getting the return opportunity for the sacrifice of liquidity? All right, the second thing that you would want to consider when investing in alternative assets is the correlation to the public markets. So some investors are seeking out alternative investments because they have more confidence in that investment compared to the publicly traded markets. All right, so you want to analyze each individual investment to determine how much you want to put into that investment and is it a right fit for your portfolio. So you'll notice that there's pros and cons that you can start to build out alternative investments versus public market investments. For some people, they want to invest a majority of their retirement funds into alternative investments. For some people, they want to have a majority of their money in public market investments, and then they want to shave off just a few percentage points, if you will, or more into alternative investments. The idea with a self-directed IRA is that no one is dictating to you what your allocation should be. Equity Trust, as the directed custodian here, we're simply providing the systems that allow you to do this. You get to decide how you want to allocate your capital, what percentage you want to put into the public markets, what you want to put into the private markets. If you want more information on how this works, you can check out the link here. All right, you can go there and get more information and education with respect to how this works, who is Equity Trust, alternative investing, and private market investing, universal IRA, and much, much more. I hope you enjoyed today's program on what is alternative investing, the different types of alternative investments, taxable versus non-taxable, and some considerations if you're going to pursue alternative investments. Again, I'm John Bowens here at Equity Trust Company in the virtual classroom. Until the next program, keep leveraging compounding interest in the absence of taxation.